So, Nathan Fonseca, tell us briefly about yourself. You are going to lead us off here. You're in the batter's box, brother. Go for it. Who are you?
Yes, thank you. Appreciate it, Don. Nathan Fonseca. I'm partner with CRS Insurance Brokerage. I've been with CRS since 2010. Started my career right out of college in insurance. Had the pleasure of starting doing personal lines right out the gate. I did graduate college in 2008, which was a wonderful year to graduate college. Everyone was hiring. So I kind of had an idea I wanted to do insurance when I was getting out of college. I got an economics and business degree, but never really knew to the extent. But really, the only job that I could get was selling homeowners and auto insurance and mutual funds, stuff like that. So jumped in 2 feet first and lasted about a good 6 months with that job. Decided to move back down to Denver. That was up north in Greeley and Loveland. Was with State Farm for a short stint, and then finally had an interview with one of my main mentors, Scott Metzger and Dick Salmon, who are the founders of CRS. They gave me a shot back in 2010, and the rest is history. So definitely want to give them the credit for teaching me what I know to this day and giving me the culture and the tools to service our clients to the best of our ability and maintain an ideal, strong, respectful agency, and have a reputation that we can lean on and make sure that everyone they work with us, that they can trust that we're going to take good care of them. So,
Nathan, can you make the distinction when you worked for State Farm, that was the only company you represented, versus what you do at CRS and representing several? How does that work from an independent standpoint?
Right. So, we're a State Farm is direct to retail. So when we say direct to retail, that means anyone, if Diane or Jamie or Don can go, they can call State Farm, their local State Farm office, and purchase any insurance directly from them. So we call those direct writers. So that's a State Farm, American Family, Country Financial, Geico, Progressive, those sort of things. So the independent agency model, the brokerage model is a little bit different. Or if you work with an insurance brokerage, you work with one individual or a couple individuals that have access to the remainder of the marketplace. So CRS works with north of probably 25 or 30 different insurance carriers directly, and the consumer, the retailer, has to work through a brokerage like ours or Holmes Murphy to access those other insurance carriers. So typically there's a couple of direct writers on the commercial side, and those are those are who we compete against, as well as other agencies. But yeah, that's how that structure is. There's the same structure for bonding, Don. I talk a little bit about that.
Yes, I'll touch on it when I get to my section. But what did your mentors teach you, Nathan? You've got some good stuff here. What do you want to share?
Yeah, so I think Don and I wanted to touch on, there's a lot of uncertainty that's looming forward in the next couple of months, if not a year, 2 years, 3 years, who knows. But as we all know, the construction is a cyclical industry, and it follows the economy pretty heavily. Doing this for 10 years, I'm not an expert, but I've seen the ups and downs. Starting in the insurance industry in 2010, there was a fairly hard market at that time, and a lot has changed since then. So we wanted to give you kind of tips and pointers on how to handle that uncertainty as it comes up throughout the next couple of months. How do you control what you can control? Because there's a lot that you can't. So as we see, the insurance or the construction industry have its ups and flows, and the feedback that we've got in the past month to 2 months is that a lot of some work is drying up. A lot of the stuff that we performed last year was already pre-financed, and we're finishing that stuff up. But then obviously the banks froze some things up, and lending and those sort of things. Developers kind of pumped the brakes. As we've heard in other sessions today, the general contractors took a big hit with a lot of jobs hitting the brakes. So that's kind of coming to fruition. It's starting to hit the trades now, as we can see, unfortunately. So we don't know if it's going to pick back up and when it's going to pick back up. But how can we help you on the insurance and bonding side of things to best position yourself to take a lot of that worry off of your plate? And so one big thing is that we focus on is strategic partners. And as a business person, individual owner, you should make sure that you align yourself with specific strategic partners that I think are going to help you build your business. No matter the size of your company, it's important to convey with your partners what your short-term and long-term goals are. Do they know what those goals are? Are you continuously talking to them about different types of the goals you have now and in 5 years, and how are they helping you get there? That's really what a good strategic partner should be at. They should be asking those questions to you. How are things now? Where we want to be. Are you in aggressive growth mode, or do you foresee yourself being in a comfort zone where you're okay with 20 employees and making the the right amount of money and reducing the stress, those sort of things. So those strategic partners can align your goals with what tools that they bring to the table to help you get to the end of the tunnel. So like I said, building trust, and I'll kind of now focus down onto an insurance broker and a couple things to consider when choosing those strategic partners. Obviously, one of the biggest things when it comes to insurance is saving money. There's an insurance broker on every corner that's going to tell you, hey, yeah, I'm going to save you money. I'll get you a cheaper price. Come work with me. But always know that's not always going to be the only thing or that you should consider. There's other services and that brokers should and can offer. And so definitely when you're making those decisions, look at what other things do they bring to the table that are going to help you, that are going to benefit your business, rather than just an insurance policy. We kind of make a joke in the biz that there's any insurance guy or insurance broker with a license can bring you drop off a booklet with a stack of papers, but what else are they doing for you? So that's where those strategic advantages come in between different brokers, and I think that you need to take it to that next level and ask those individuals who you're working with or potentially working with, what else are you going to help me with besides giving me a certificate of insurance? We can also reduce uncertainty by communicating with your broker. I kind of talked about this a little bit, but how often are you speaking with your brokers? Is it once a year when they present the renewal numbers and then they collect the check and walk away and you don't talk to them again? Or are they doing stewardship check-ins where they're talking to you every 6 months and checking in, hey, how's your business doing? Are you bidding a lot? Where are you bidding? What are you winning? What are you missing on? Are you changing any type of work that you're going to be doing? Do you want to go into a different scope of work? And so the goal is
the frequency of that, Nathan. What frequency do you like having people on or having clients or customers on with you? Or does it depend? And if it depends, what does it depend on? What does the frequency depend on when you're talking about this and trying to line out a communication plan with your client?
So I think our typical structure is to have that 6-month check-in. Depending on the size of the business, it could be quarterly or every 6 months, and then obviously there's more compacted meetings leading up to the renewal time period, whatever time frame that might be. But we always want to make sure that we have a pulse on what our clients are doing and how they are doing. If I know that work's slowing down, I met with the client on Monday and they said, yeah, it's looking like half the revenue from last year just because there's no work out there to bid. Okay, so what do we need to do now to help you reduce costs? Do we need to lower exposures on the policy at this point? Are you going to be selling any equipment? Those sort of things. Are you laying up autos? So having, and their insurance doesn't renew for another 6 months. So continually having that options are available to them in the middle of the year to help reduce that cost. And then they think that it might take, they might have to wait till the renewal, and that's not the case. So, at least check in every 6 months, and then you're talking 120, 90 to 30 days out, pretty consecutively to get that renewal taken care of. And then also having that conversation in the middle of the year, if let's say that ABC Contracting decides to do some, let's say they're directional driller, and they're putting communication and gas line, and they do it for an apartment complex, and they don't think anything of it. They think that that's a commercial work, and they're not touching the structure, not doing any vertical work. But they might, let's say they have a residential exclusion on their policy, but they didn't think that was residential work, and they didn't tell me they were doing that kind of work, or we didn't have a conversation. I didn't reach out. Now we're putting ourselves in a compromising position where we could have an uncovered claim if there's residential exposure that they're not covered for. So
is it fair to say that any habitational work these days, Nathan, any habitational work is considered residential is an overused term, but is it true that any habitational is considered in that category now?
I think you should operate in that regard, even if it's, let's say there's multi-use, where we got restaurants and office space below, and then apartments or condos above. Contractors might look at that as a commercial building, depending on the occupancy, whether they're owner owned or single owner owned. They should proceed with caution and making sure that everyone knows the difference between residential as far as the exposure, hopefully, of how that affects your insurance in the litigious environment here in Colorado. So good question. I mean, rule of thumb: if someone's living in it, pick up the phone and make sure that you're good to proceed. One thing that, when it comes to those check-ins on every 6 to 12 months, your broker should also always giving you an update on what the market looks like. It's continuously changing. I wouldn't say it's not huge waves like it was in the past, so, over a 6 to 12 month period. But having a broker that's dialed into the construction industry itself is very important. Find out how much construction clients do they have. How long have they been working within that industry? Are they heavily involved in associations that tap them into legislative updates within that industry, different types of projects, which then also helps them tie your business into what they're hearing within the industry, and then which also should tie into what's happening within the insurance industry. At any given time, you should be able to talk to your broker, say, hey, what's going on? What do you think my renewal is going to look like? There should never be any uncertainty with how your renewal is going to turn out. There should be a clear line of communication consistently. If your agent knows that there might be some bumps coming up that involves your renewal, they should be very transparent about it on the front end. And if you trust your broker, then you're going to trust the fact that they're going to use every single resource they possibly can to put you in the best possible position when it comes to the coverages offered and the pricing that it's subject to.
Nathan, 2 questions about the renewal process. We've got a question from the field from Diane Hills, Diamond Excavating. If you're in a renewal meeting and they ask you, do you consider retirement facilities, senior living facilities, if you will, in that residential category? Does that fall into that zone?
It depends. If there's a gray area there, rule of thumb, I would say yes. Pick up the phone and talk to your broker. You can't make any assumptions. Yeah, most of those times those units are rented out and there's one owner, which makes it a lot easier, and there's a little bit more appetite for that. But do we know that right off the bat, or is it a retirement acuity where they're single owned condos? Because those are out there as well. And so do we know the future plans of how that property is going to be developed and sold off? So it just depends. I think back to our rule of thumb: pick up the phone and call your broker and ask them. Send them the contract.
Right. I mean, I think, Diane, does that answer the question? It depends. Could be a couple different answers there, right? But that's okay.
Oh no,
insurance. The answer
is the question. Thank you very much.
Yeah.
Nathan, when should you be working on a renewal with a client? What's up with the time?
So I typically like to work 90 days out, if not a little longer, depending on the schedule. But that rule of thumb is 90 days out to get in front of the client, make sure that we have a strategic plan when it comes to the renewal process, that we are gathering updated information and have plenty of time to do so, updating exposures, giving the insurance companies plenty of time to provide us with their best numbers, especially if we're doing a marketing effort on for that year. We want to make sure that we have plenty of time for the carriers to look at we're going to get our best results if we have ample amount of time from the marketplace.
What marketing effort? What are you talking about? When you say marketing effort, what are you getting at?
So when we talk about marketing, where that means, we'll sit down with the client and we ask, this is our plan. You've been with Travelers Insurance for, let's say, 4 or 5 years. Over the time, they've taken some rate, which certain carriers tend to do that. And the insurance marketplace has changed over that 3, 4, 5 year period. So when we say a marketing effort, that means we're going to gather as much information, update as much information in regards to your business, and we're going to put it together in a nice package. We're going to paint a picture, and we're going to show that picture to, what might be 2 or 3 different carriers, or might be a handful, depending on who would be interested. I think it's strategic on the broker's part to pick up the phone, call the carriers. And so your broker is picking up the phone. They're calling each carrier who they think might have an appetite for the work that you do. And they're finding they're narrowing it down to a list of insurance companies that want to review your business and underwrite the insurance for your company, and ideally put a proposal on the table. We gather that information back, ideally 30 days out. Review the premiums, the coverages, and analyze who's offering what, and which products and program is going to put you in the best position, make you competitive in your marketplace, and present that option to you at that point. That may still be with the same carrier you're with, but at least we know that by seeing what other results were yielded from the marketing of your account. Or we may be moving your account to another carrier. Just depends. So that's how we would approach that. And then one thing I do want to touch on is the marketing piece and the renewal part. Sometimes there is uncertainty about the timing. I think Don kept hitting on the timing. Push your broker to get that information to you in due time. Like I said, the 60, 90, 30-day benchmarks. 90 should be your first meeting. We're updating your information. 60 days maybe a check-in and risk control visit if we're marketing the account. 30 days you should be looking for and receiving your renewal. So you have ample time to get information, renewal information out to your clients, get information put into your autos, and that there's no one holding payment because they don't have updated insurance information, those sort of things. Unfortunately, it is a practice with some agencies out there, and we've been benefited from some of these practices. But if your agent's pushing it a couple days before the renewal, and they show up with a surprise in their pocket, and they're trying to do that because it doesn't give you any time to potentially go out and look at other options, and they're pigeonhole you into that one single option without communicating with you that was going to be the case. Don't put up with that. I think it's a lot more. It's not as prevalent as it was back in the day, depending on the market and sort of.
Nathan, is there any gamesmanship by the carriers, the insurance carriers that you deal with, where they won't release a quote until fill in the blank time? 30 days would be awesome. I'm not sure I see that normally, but if you push them, great. But do some kind of hang on to it if they think they're competing? And we've got a lot of subs on the call, and subs, they'll get their bid in at the last, come down to the wire and get their bid in if it's a hardcore process. So do carriers sometimes play that game?
We see that they try to. They try to, but that's our job to make sure that they don't. And if that's a game that they want to play,
you're controlling the process at that point.
Right. If that's the game they want to play, then they're not someone that we're going to want to do business with. So if they're trying to leverage their position, we'll find someone else that will be able to work with you and us on our timeline. As long as we're getting them the information in a timely fashion, they should be able to do the same for us. If they really want to work with you, then they should be professional in that regard. So we don't typically see that. And if we do, we pivot and we find alternative options. I'm going to jump over to safety. Safety isn't an accident. That was one of the taglines that we put in there. One of the big things that any contractor should push is making sure everyone gets home safe to their family every night, right? And it is the absolute truth that from doing this for 10 years, working with hundreds of clients over the years, safety culture starts from the top down, 100%. And it is an investment. We want to make sure that your employees feel safe and they feel the dedication to that. And if they feel that that's coming down from the management, from the ownership team, and that they're regularly hearing that from management, that, you know, the voice in the back of their minds telling them, you know, hey, the decision I'm making, is that what are the results going to be? Is it the right decision? And is it going to keep everyone safe around me, whether that's employees and the public? So how is your broker helping you instill that culture within your company? That can help with a lot of uncertainty. You could be proactive, and I'll get to proactiveness here shortly. But what resources is your agent providing you to help with that culture? Because, you know, it's a to-do. It's on your to-do list. It's not always at the top, and it costs money that you don't always see the initial, you know, return on investment. So how is your agent helping you instill that? What resources are they providing you? Do they have on-staff loss control consultants? Do they have, you know, help you manage your claims in the event something happens? Do they provide safety materials for you? Do they visit your office and meet with your safety managers? Do they go to your job sites? Those sort of things. Those are all things that you can find in a decent broker that will all be provided. You know, there's great safety, independent safety companies out there as well. So don't hesitate to reach out to them as well. But you can find brokers that will be able to package that all together in a nice package as well.
Nathan, when you're able to, Nathan, when you're able to when you are able to enhance a contractor's safety culture and make an impact, you know, that's awesome. If you're able to do that, if you're able to coach and be that way, because I think we all know, and by the way, these carriers that Nathan's talking about, I think they know who in town doesn't have a safety culture, Nathan. It's not hard to figure out, is it?
No.
And when the top down doesn't embrace it, and it might be lip service, you know what? People see through that, Nathan, I think out there, and word gets around in these towns.
Yeah, absolutely. I mean, you know, I guarantee Travelers has seen most, if not all, business, you know, submissions from all companies. And I don't know if this is where you're going with this, but, you know, if you call Travelers and you say, have you seen ABC drywall in the past? Yeah, we saw it 5 years ago. We did a loss control visit and it didn't go well. So that's their first impression, and that goes in the notes, and that's not going to go away. So if we can always try and put our best foot forward when it comes to the culture of the company and how that trickles down, that's only going to serve you better. You know, there's been definitely situations, and I'll get to this in a little bit, but where you're backtracking or you're trying to pick up the pieces when you've had a couple bad years, versus if you have a partner, a strategic partner that helps you see those potential exposures before they happen, and how do we prevent them from happening? You know, we understand accidents are going to happen. That's why you have insurance. That's why you should have a comprehensive risk and management insurance program. But how did we try to prevent those losses from happening before they did? And that's the story that you want to have your broker be able to tell. You know, like I mentioned, it's like painting a picture, right? If I can go to Pinnacle and say, hey, you know, they've worked with our loss control consultants, you know, several times this year. Here's the log of items that they've addressed. You know, they implemented a return to work program and reviewed their drug and alcohol policy for them. You know, we did some winter driver safety training, and they had 5 people get OSHA 10 certified, all within the past 12 months. And we show that to them, and then let's say that you had a bad claims year. You had a couple bad claims, and now you're going to a different tier. Your rate's going up. You know, now if you did make that proactive effort in and around those claim activities, that gives me more ammunition, and that would allow us to potentially offset that rate increase with some credits, because I can go to the underwriter and say, hey, they do have the culture there. We just had some accidents. But if I don't have that ammo, and then we just got to deal with the rate increase, so then we potentially go to market, and I'm trying to paint a bit different picture that I don't necessarily have the ammo for. So.
Nathan, you wanted a 5-minute warning. You're on the clock. If you got a few more points here, you're going to hammer home. Let's hear.
I wanted to jump to the proactive versus reactive piece of it.
Okay.
And this is a lot changed in our agency a lot as well over the past 10 years. Is, you know, I'd say 7 to 8 years ago, you know, we definitely had the, you know, additional services to provide you, but it was more of so sitting back and if the phone rang, yep, we can help you with that. We flip that. You know, now we're going to create the agenda for you. We're going to sit down on the front end and say, hey, what do you need help with, or how are you doing things now? Because you may not know what you need help with, but how are you doing things now? And then we provide our expertise, our feedback, and saying, this is how we think we can improve, and this is what you should improve upon, and this is how we're going to do it. This is who's going to be involved. This is when it's going to get done. And we shouldn't be the only ones that, we shouldn't bring that philosophy to every business. It should just be there. Being proactive versus reactive. If you're reactive after a couple losses, you're getting non-renewed by your carrier, and now you don't know what's going to go on. You're kind of worried about, where are rates going to go, and there's that uncertainty, that anxiety of how that's going to happen, or what's going to happen. But if you have the ability, or you did, if you were proactive in installing, the right protocols and the safety measures and the trainings, and you pair that with the accidents, that's going to paint a way better picture than if you weren't proactive in installing those protocols and procedures. If you're reactive to it, you're going to have to deal with a rate increase, which you should still put in those practices to prevent losses in the future. If you're reactive, you're going to expect an increase in cost, unfortunately. So,
Nathan, I've heard insurance costs are going up. I've heard it, maybe even seen it. Why is that? What's going on that's driving this? What's happening in the world?
So we're seeing, I think, the hard market on a couple different levels, different lines of coverage. I think that the hardest piece of commercial insurance right now is commercial auto. Carriers are getting their butts kicked, quite frankly. You might not see it specifically in your business, but nationwide and specifically in Colorado, auto accidents are costing a lot more to adjust. You can't fix a bumper for $1,500 anymore. And you unfortunately can't turn on the TV without seeing some sort of attorney on the TV or a billboard suggesting that you have a conversation with them. So we're seeing a lot more of a litigious environment when it comes to those accidents, auto accidents, and slip and falls, which are general liability claims. And so unfortunately, that because of the rise in the litigious environment, specifically here in Colorado, we're seeing higher dollar claim values. I've been doing this for 10 years. I didn't see $1 million claim for 9 years, and I've had 2 in the past 12 months. And so now umbrella carriers are starting to freak out a little bit, because umbrella carriers, just like bonding companies, assume a $0 loss ratio. And once they have a claim, they're going to react to it pretty aggressively, and that's what they're doing right now. So you got your commercial auto and your umbrella markets are certainly hardening. They're taking rate. Insurance carriers are not offering the umbrella limits that they used to anymore. So if you work at DIA and you need that $10 million umbrella, you better give us a heads up well in advance, and you better build that into your contract, because now I'm probably going to have to go to 1, if not 2, 3 different insurance carriers to layer that up to that 10 million, if not higher, and it's going to cost a lot more. Hopefully that corrects itself in the future, but that's just how it is now.
It's not easy, is it, Nathan? It's not easy right now, is it?
No, it's not. But as long as we're communicating with our clients well in advance, we're taking away that uncertainty. We're letting them know that we have the tools to do that, and your broker should be doing that. I'm sure there's a lot of great brokers out there that are doing that, and hopefully that's who everyone here is aligned with. I would like to introduce Don Appleby. Obviously, we've most people probably know him in the room, but I did want to do a true or false question for him. Okay.
Oh boy, I thought I was supposed to ask you the true or false first, but you go ahead. Maybe I'll finish with you.
So I hear that swimmers are big in reducing uncertainty in a variety of ways. With you being an all-conference swimmer not too long ago, is it true or false that in order to reduce uncertainty when it comes to training and/or meets potentially, did you wear 2 Speedos?
At the same time?
At the same time.
True. It wasn't to reduce uncertainty. It was to create certainty and create more drag. I guess it was creating certainty. It would create more drag and you would train harder. So we knew what we were doing. But sure enough, risk control, we're talking about risk here, and we're going to get to bonds next. I guess it could be, if you had a hole in one of them, you could, two is better than one, I guess is what I'm saying, Nathan. True. The answer is true. I'll get to you at the end, by the way. You're not off the hook that easy. All right. Thanks for the intro. Yep. I'm like Nathan. I'm an independent insurance agent, but the niche I have is on bonding. So I've got a lot to cover here. I think I can name that tune in maybe 20 plus minutes here. So it's going to be some rapid fire stuff, you guys, if you don't mind. I'm going to click through some things and what are we going to cover today? And I do have some notes. If I'm looking down, I do have some notes to keep me going in the right direction. We're going to share some observations from the surety bond markets, okay? And strategies to succeed. No matter what the world is doing around us, we're going to show some strategies here you can take out of this session. I think some of it's going to be intuitive, just maybe some basic reminders. You'd be like, oh yeah, okay, I got that one. But others might provoke some questions. And so please go ahead at any time, put in the chat line a question. Nathan will throw it to the field here. And that means you too, Nathan, if you have questions, okay?
Yeah.
So some background, setting the stage. We're like Nathan. We represent like 30 different surety underwriting markets who cover all sizes and shapes of contractors. And, I think for the most part, they have performed and responded in a steady manner over the past year, believe it or not. What has shifted is that, they're kind of back to the basics here. They're back, the surety underwriters are back to the basics. And underwriters are good at underwriting, asking questions, right? This is their job. And believe me, they have time on their hands right now, okay? So I think most of the questions we've been getting are pretty good. They're pretty good. But where we're at with uncertainty comes jittery feelings, and it's led to a lot of discussions. Remember, despite work ongoing, underwriters were like, hey, you better plan for, the downturn now. You better budget for the worst. What are you doing? Those kind of questions are happening. And I think, I guess from the previous sessions, it's coming true, isn't it? That we are in a cycle. We are in a down cycle. So the other questions are about your backlog. How long will your backlog last? Are you collecting your receivables? Stuff like this. These basics, when I'm talking back to basics, what I'm talking about. How's your relationship with your banker? Do you have a strong one with a construction savvy lender? Those are the kind of questions we're seeing. Again, when surety underwriters are looking at you and asking these questions, I think they're really starting to hone in closely. They're scrutinizing profitability, which you're going to show in your P&L, but you also can show it in your work in progress, like what's coming up, what's your profitable backlog look like. Here's some keys. Here's some more keys I want to highlight as part of this discussion. I think, look, let's start with the top line. Let's start with top line revenue and we'll work down, right? Let's start with revenue line. It's time to examine your best customers, who treats you right? Who are you building for that treats you right? Who pays on time? Who wants you to succeed? This seems obvious to me. It seems obvious, doesn't it, right? But I'm just playing back what I hear from other contractor customers and what they're doing and saying. On the flip side, who's not treating you right? We have them, don't we? Have you been there? Have you been there and it's like, I don't know anymore. Maybe it's a little bit abusive. Does it feel like that sometimes? You're in a tough business and we know it and you can be there. It happens. So it's time to examine the best relationships and double down on those, all right? Let them know how you feel. Let them know what you're doing for them. Keep that tight. All right, so you know what comes after revenue, Nathan?
What?
Costs. I'm not talking about direct costs. I'm not talking about how you build a job. I have to use the O word, overhead, okay? No one likes to talk about it. Think about it. We're going to have to own it. You know why? Because you do own it. You do own your overhead line. We got to talk about our people, Nathan. Who's cutting it? Our staff, our employees, who's cutting it? I think the pandemic exposed our cracks. It shined a white hot light on people that can't adapt, not willing to adapt, aren't resilient, don't want to change. And look, I'm not being crass here. I'm sorry if I don't want to come across as being crass, okay? I'm being realistic. I just spoke to a general customer who, look, they just laid off 16 people and they might have to do it again. This is coming. So that's a sobering thought. That is a sobering thought. And can I just leave it with don't wait to assess your folks. If you're waiting, don't wait any longer. Just you're going to have to get hardcore, I think. And I hate to be the guy to say that, all right?
How many times do you how many times have you had to have that conversation in the past 12 months? Would you say that you're looking at the financials and
Yeah.
the whip, and you're saying,
I
are
hear
you
it
getting that direction, or how does that work?
Nathan, I hear it from more from prime contractors. 4 out of 5 prime contractors I hear it from. 1 out of 5 subs. The subs have been busy, and so I haven't seen it as much on the sub side. Does that answer the question?
Yeah.
Okay. Look, back to the people and assessing. You have an obligation. You have an obligation to your whole team. Yet you by not letting a bad apple stay in the barrel. Everyone sees it. Everyone sees what's going on. I know it's harsh. I think it's harsh. But I had to go there because surety underwriters are asking us, how are you going to control overhead? I'm not sure there's many other ways, all right? So if you can tell them candidly, I'm reassessing my people. You know what? That's an answer. That's an answer, and that's a real one, all right? Okay, what's next, Nathan? If we're talking about revenue and costs, showing it on paper, right? If we show financials, we have to show our financials on paper. I'm talking about your balance sheet, your income statement, your work in progress, your accounts receivable aging. Folks are making judgment calls on the stuff that you're giving them, okay? So
I don't know if you're going to go here or not, but what's the best way for them to present those financials to you?
Yeah, I'm going to try to get there, Nathan, and I can try to name that tune in a few notes here. So don't let me drag on here. But the folks that you're sending the financial statements to you, I'm warning you, they're experts at reading financial statements. That's their job. They're really good at it. And they do a financial analysis on you, by the way. It doesn't go into a black box. It goes into a credit model, believe it or not. They crunch the numbers, and they are poring over your financials, no matter how often you give it to them. That is what they do. And like I said, they got time on their hands. So I want to share a secret or two. Maybe they're secrets, but a couple of key points. Remember what bonds do. I forgot to remind everybody, what are we doing? Why are we even talking about this? Bonds guarantee 2 things: your performance to your customers and your payment downstream to suppliers. That bond's not for you. It's for others, okay? So the underwriters you deal with, they're assessing your ability to do both those things at any point in time, okay? So of course, they want to see that you're able to pay your bills. Look at your cash balances. Are you using your bank line? Are you collecting your receivables in a timely manner? Listen, this was in another session we did. I'm not talking about retainage. I'm just talking about your over 90 receivables. When you send in a financial statement, you should be sending in your accounts receivable aging schedule as of that date, but manage the discussion over what's 90 days, over 90 days due. What we considered a slow receivable, right, Nathan?
Yeah.
Not retainage, but I want you to own the message, okay? Wouldn't that be cool if you're telling here's the data, and you're not just dumping it out. You're saying, here's the data, but wait a second. That receivable from ABC general contract, it got paid. It got paid on the 15th of January, so I'm good there. Or on the flip side, you know what? Like the session that's going on down the hall about liens and stuff, that's a disputed item. I had to lien the property. You know what? That's an answer. Well, you don't want them throwing out that receivable as an asset. So if you own the message, that's what I'm telling. That's one of the keys here. One of the secrets I wanted to.
We have a question that came in real quick. How much do you love bonding?
Nick Williams, I think
He wants to know when you're running into it.
I think I'm like the COVID effect. COVID ratio, 99.8% effective. Or you get over it. Right? Thank you, Nick, for chiming in. I hope you're digging this. Okay, Nick, for you, a word about work in process. All right. I see a lot of, this isn't Nick, but I see a lot of emerging contractors that are on QuickBooks, and the ability to produce a standalone, reliable work in progress might not sync up to QuickBooks. Okay. But it's the only forward-looking document you give anyone. And so I got to stress how important this is. If needed, there's a short form work in progress out there you could find. There's a long form that details over and under billings. Either one's fine. You need to tune it up if you're not, okay? All right.
I run into a lot of clients that don't have that. I'll sit down and on the insurance side of things, we want a WIP or work in progress or some sort of jobs list.
Yes.
And it's written on the board in their office. And they're like, well, that's it right there. So
Nathan,
when you run into a situation like that, how do you handle that?
It's our job to coach, Nathan. You said it earlier. It's our job to communicate and coach. Something we don't see. On the safety side, you mentioned, like, here's something I can do for you. Same on the bonding side. Here's something you got to think about. We're half the time we're coaches. The other half of the time, Nick, we're psychologists, by the way. True. Nathan has to know stuff on the insurance side. I just have to know you, by the way. Okay. So back to work in progress. It's our job to coach that up, Nathan. When you see it, can I help you? Look, I've typed up work in progress reports for customers on the spot on your laptop. Send it to them. They can complete it. It's not that hard, but it is that critical, man. Okay.
Right.
And it sounds like that's your side of the business too. So
yeah, it goes a long way.
Okay. What's another point here? I got a really good one. I got to remind you. I got to keep preaching. Can I keep preaching on, Nathan?
Preach on, brother.
Who's with me here? Who's with me? Please be with me on this one. So I need to talk about expectations about timely reporting. You've got your financial now, right? What is timely? And this is an expectation. I'm not making this stuff up. This is what the expectation is out there. Most underwriters, most surety bond underwriters, they expect your month-end interim statement, let's call it a quarter-end, your March 31st interim statement. If you're on a December calendar year, they want that statement no later than 30 days after your month close. Seems reasonable, right? That's considered timely. If you can do it, you matched expectations. Wouldn't it be nice to beat expectations though? That's pretty cool. What about a year-end CPA statement? When do we need that? Oh, CPAs are busy. Well, that's their job to be busy. Your job is to get them in early and get the statement to your underwriter so they're not guessing if something's wrong. Year-end closing, I want to see that 75 days after year-end. So I want to see that final product actually March 15th for December year-end. If it's not ready, ask for a draft. Your CPA will do a draft subject to, changes. That's okay. Get it. It's important. This whole timeliness thing right now, mission critical. You with me? Remember the goal of this session, Nathan, was remove jitters, remove uncertainty. When you're reporting in a timely manner, you're doing it. So good job on you, right? All right. Wow. Whew, that was a lot of stuff. Any quick questions before I move on?
Limits your bonding capacity when it comes to timing, reporting timing and getting those reports or those reports to the underwriters. How do we get to, increasing that capacity?
Well, you threw a curveball at me. I'm trying to swing for the fences here. It's a good question, Nathan. It's not exact science. Okay. First thing I can tell you is building a bond program to support your business plan is not science. So there's some art form here. And I would submit that, you need an aggregate. The programs you're talking about, Nathan, I think are expressed in two terms. Single job parameter. I'm not going to call it a limit. Let's not call it a limit. Let's not limit each other here today. Let's expand. So you want a single job parameter. My question would be, what's your largest job you've ever completed? $5 million. Okay. Well, you're good for a $5 million bond then, in my mind. Heck, you can even ask for 2 times that in our business. You could ask for a 10 and get away with it, not be laughed at. What about this aggregate basket of bonds, Nathan? This thing, as we've expressed, a single job parameter, but that's not the only bond you need. I submit you need a basket of bond credit, a basket of bonds, which is known in our business as the aggregate parameter. I would just say throw a dart. Aggregate parameters, your annual revenue. If you're doing 30 million, I might need a $30 million bond program. You probably don't need all of it at once, but you need maybe one big job, build around it, and you want to bid another big job at the same time that starts later. I think that, basing your bond aggregate program on your annual revenue sometimes is a good mark. Does that answer the question?
Yeah, it does. Thank you.
All right. I am really on the clock here, people. I got some room to run here. Here we go. Your best fans. I want to talk about your best fans. Your banker, your surety agent like me, and your insurance agent like Nathan. Your banker, your bond agent, your insurance agent, your lawyer if you have one. These folks want you to win. All right, let's talk about each one real quick. Bankers. We got to go there, Nathan. We got to do this. You know a good one. You know a good one when you feel it. That might not be the right phraseology today. You know people that you remember how they make you feel, I guess is what I'm saying. What I'm saying, a good banker when they understand construction and they empathize with how hard it is. They empathize with you in this process that you're in. Tough team sport that we're all in together here, actually. So, construction's hard, it's a grind. We all know that there's no guarantees. So a lender or banker that likes construction is worth their weight in gold, in my opinion. Our challenge is to stick with these banks and these bankers. And look, there's been turnover, right? We saw a good many construction savvy lenders turn over the past few years. That's the business, all right? It's fine. But if you're left wondering if your bank will stick with you, contractors long term, you don't know the answer, that is not a good thing right now. Remember, create certainty, remove jitters, including yours. That means having a good construction lender, my opinion, my observation that I've seen. It's my 30th year in the bond business. So yeah, if I get worked up about it, Nick, that's why. By the way, lenders want your cash, okay? They want deposits because they can use them. They really like having your cash, It's not about lending money to you. It's about they can lend money elsewhere using your and other people's deposits. That's what they do. That's how they do business. A quick note on PPP. It's viewed favorably. It's viewed favorably by underwriters. Don't worry about it. They're going to only ask you, the questions we're asking is, hey, have you applied for forgiveness? Have you gotten forgiveness? That's the only question to be prepared for there, all right? Look, I'm going to skip over the lawyer part. Again, a good lawyer when you see it. Good lawyer, you can't live with them. You can't, fill in the blank there, right? Contract review is important, is all I'm saying. And sometimes if you have to outsource it to someone like Nathan or me or your lawyer, there are lawyers that'll do contract review. We're looking for things like payment clauses, damages for delay to watch out for you and remove jitters and uncertainty, okay, if you can. And I think there's folks out there that aren't really up to speed on what's available for retainage provisions. In the state of Colorado, for example, thank you ASA for getting it 5%. I still see on public work GCs trying for 10. Just saying, don't do it. All right, real quick, we got a few minutes left here. I got
10 minutes, 7 minutes.
Okay, let's get there. We're going to get there, I promise. Let's talk about your other fans, your surety agent, me, your insurance agent, Nathan. Sometimes they're not the same person, right, Nathan?
Correct.
And that's okay. That's okay. Sometimes it's not the same firm.
But they should work closely together. They should, even if they're not with the same agency, they should be able to go back and forth and help each other out and support each other.
I think my point, and I want to hear what Nathan says here, a good agency function that we do. Remember, we're your biggest fan. We're your advocates, whether it's bonds or insurance. And look, I think that a good agency like both of ours have both construction bonds and insurance, separate experts in both fields. I know Nathan's firm does. I know my firm does. If you're stuck with a Main Street agent that really isn't a bond specialist and you need bonds, make sure you know that. Make sure you know that, okay? I'm not sure how else to say that without bashing people, Nathan.
Yeah, I'm network. Ask, you're at an ASA event right now. Ask your colleagues at ASA, who's your bond guy, or who's treated you well. You'll find someone that knows what they're doing fairly quickly.
I think the point here is we are your biggest advocates. So when we're doing the communication things that Nathan talked about, we're able to get better results for you to support your business plan. We're your biggest fans, man. Thank you, by the way. All right. I got one more fan level I got to talk about, and that's that surety bond underwriter we talked. Remember, Nathan and I are distributors of insurance and surety products. So the 30 independent insurance 30 insurance companies we contract with, we distribute their product for them. They pay us to do that, by the way. That's how we do business. That's how this business is conducted. But I want to go there, that firm in the back of the room. Nathan, you mentioned a bond company never expects to pay a loss. Well, that is the underwriting standard. It's not reality, but I want to talk about those folks, okay? I want to talk about, remember, the surety agent, the role I have, places your bonds with a surety underwriting company. So we need to drill down in the time left. We got to drill down here or drill up to this level and recognize the role that the surety underwriters play. Surety underwriters work for big insurance companies, right? But bonds is this small niche department down the hall. That's down the hall where these surety underwriters sit back in this dark corner. And so if there's an insurance office with 200 people in it, there's maybe 3 or 4 folks down in that dark corner that specialize in bonds for contractors. And you know what? They're shunned. Because, why? Because bonds is not insurance, Nathan, is it? Is it?
No.
It's a credit product. And so people that are walking past them to the water cooler or the bathroom, they look at it and say, you know what? I don't know what you do. I don't know bonds. Too bad for those folks. But I'm telling you, their frame of mind, they're different. They look at the world differently. And, you know, it's kind of the reaction to that's kind of dumb too, because bonds are simple. Nathan's got to know stuff on the insurance side. Like I said, bonds is such a simple business. I guess I want you, you know, back to what Nathan said, a surety underwriter never expects to pay a claim. Did you know they never expect to pay out? It's true. But wait a second. We gotta think about that for a second. If they never expect to pay a claim, what are they doing? What are they doing? Well, I think we talked about it, didn't we? They're constantly assessing your financial ability in order to meet the standard we talked about to never pay a bond claim. That's right. I think the small 1, maybe 2, maybe 3% that you pay for, customers pay for a bond, that won't really solve a default, will it? That won't pay for anything, man. So I think the surety guarantee twofold that you'll perform and pay your bills, you know, downstream, this is what it's about. They're assessing your ability to do that. That is what it's about. Don't ever forget that. That's what they're doing down there. And the people that you provide the bonds to, that's the expectation too, is that you are pre-qualified to do this. And it's I think it's a heady thing, right? Think about it. They're 2 very heady guarantees. No wonder they're asking all these questions, not once and not twice, but they're constantly assessing your ability to pay your bills. And for the size of bonds in that program that you talked about, Nathan, does it work for how you're running your business? I guess what I'm asking you to do is just to understand and empathize with their role. They want to know about you, about how you think, about how you operate, about what your views are, about the marketplace, labor, subs, GCs, your references, your background, tell your story. There you have it. They love to be told stories, and you are the best storyteller about you, aren't you? All right. Got to step back. We're on the clock, Nathan, it looks like. Let's step back. Once you share your story, your financials, your business plan, it's the surety agent's job to find a match for you. That's what's going on here. One of those underwriters we talked about. Your agent, we're your enabler. We're your enabler to place bonds with your underwriter, the one who accepts the opportunity to back you, by the way. We're the enabler. They accept it. They accept the opportunity. And they want to vouch.
That relationship with the underwriter is huge. I will echo that. It's massive.
It is. I think, you know, it's like any other business, Nathan. The more you do it, the better results you have. And, you know, the more you communicate, it just builds on itself.
Yeah, on the insurance side, you probably will never talk to a P&C underwriter ever. You know, but you should know your bonding underwriter by their first name, 100%.
True. You're borrowing surety credit from an insurance company. You're borrowing their name to vouch for you if you fail. It's kind of a weird thing. But if you think about compare it to a bank, you're not going to go borrow $1 million without meeting the banker. You got to meet the banker. They got to see you. They got to figure it out, right, Nathan?
Right.
I think that's what you're talking about.
Yeah.
All right. Final point in 2 minutes here. I do want to remind each other, and I love Nick Williams, if he's still on the line every week, he's doing this, how connected we are. You know, construction is the greatest team sport ever. I think we're lucky to be in it. We're lucky to be in construction, and it's been deemed essential, all that stuff. What we got to remind ourselves, why we're so lucky, we are connected. And the reminders and observations I'm giving, really, it does remind me how connected we are. And thank you for that face-to-face comment, Nathan. All the people that I mentioned, you know, here, all these people you deal with, maybe that we haven't mentioned here, you know, all of them can be found on LinkedIn. It's true. And I had to go there. You might scoff at that. You might not be into it, but I'm encouraging you to be into it. Remember what we're doing here. We're trying to create certainty. And if people can find you and see you on LinkedIn and you're transparent, that's cool. Isn't that cool? Let's create some certainty embrace it is all I'm suggesting, right? Same goes for trade associations. You being here with ASA, it's awesome. Thanks for participating. Wow, I'm getting near the end here, Nathan. Can I give you the good news though?
Absolutely. What do you got?
Hey, Nathan, your news was dim, grim, dire. Insurance costs through the roof.
It always is.
Sucks, but we're all having to face it. But I want to go with some good news. You ready for it?
Yes, please.
Two things. The need for construction improvements never really goes away. You know what I'm saying? So we're going to get through this cycle. Second, the other good news is that surety capacity, bond capacity to bond jobs, if you want to grow or go from 5 to 10 or whatever multiple that is, the good news is it's plentiful. And especially for small businesses. If you're a startup, man, you can get a bond. Trust me, okay? The marketplace is competitive on that end of the business. I want to emphasize that credit is available and competitive. It's out there. There's a lot of companies delivering bonds and bond program capacity. So, all right, what should you expect? You should expect to get the surety bonds you need, but you expect to invest a little bit more time in this, in the bond relationship and your story with your underwriter and your agent. Just you be prepared to answer some of these more questions. I hope I frame that up and set that up for you. What did we do here? We relieved jitters, I think. I think we created certainty in an uncertain world. Honestly, we have a grand obligation.
That was the goal. Hopefully it helped everyone.
I hope we got there.
One thing I don't want to forget, though, I wanted to wish you a happy late birthday.
Thank you.
Oh my God.
And true.
You guys
True.
made insurance and bonding so exciting today.
Oh my God.
This is very exciting. I'm sorry I crunched my crackers and cucumbers in your ear. Could I really
you're funny,
have picked
Jamie.
a worse thing to pop in my mouth on and not be muted? Good grief. So sorry.
You're funny.
It really threw me off.
Nathan, true or false? Soccer is a contact sport.
Yeah, very true.
All conference Jeffco player. True or false? You had your shin snapped and were carried off on a stretcher.
Oh my gosh.
Well, that was true. I was in high school. I was on a breakaway and a defenseman came out of nowhere and didn't really care where the ball was. He just cared about where my shin was. So,
Ouch.
snapped that bad boy and took me out for the season. But I'll always remember that for sure. Thanks for reminding me, Tom.
Hey,
This is why on your right side you lean a little bit.
Thank you all for attending today's feature session. We look forward to seeing you tomorrow at 2:30's feature session, Colorado Employers Beware. Catherine Craigmile, attorney with Nixon, Sheffrin, Ogburn, Drew, focuses on the new Colorado employment laws that actually went into effect January 1 of this year. Have a good afternoon, all.
It's important stuff. Tune in. Thank you, guys. Good.
Thanks, Diane.
Great.
Thanks, Jimmy.
Diane, it's great. It's just great to see you always. You know that.
All right. Take care.
Good seeing you, Don.
Nathan, thanks, man.
Later, buddy.
Pretty good ham and egg. See ya.